For those of you who are the new faces out there that I see and you're new to our ecosystem, I want to give you a quick snapshot of, what we do and where we're from and all the things. So, Stacy and I have been investing in real estate for over 20 years now. We started independently for me, 2002, for Stacy, 2003. And then we met and combined forces in 2015, which was really epic because by the time 2016 hit, we had both been to so many seminars that I had more books than I had doors. It was really frustrating. So we decided, at all these seminars, they're telling us about syndication, but when we go to implement it, it's a little difficult. And we had this epiphany where we decided, we could just use the same exact approach that we've been using to get our smaller residential properties, and that was joint venture. So basically what we did is we took that same approach and we implemented it and perfected it. After banging our heads for a few months, we just had that moment and then implemented it for a few years. And then that is how we literally use the joint venture apartment acquisition strategy to launch the Remote Multifamily Investing Academy in 2019. And it has for the past 4 years scaled into being the #1 multifamily academy that teaches investors how to scale with apartments by leveraging joint ventures first. Then we teach you how to scale leveraging syndication. So today, I want to welcome you to the weekly training because that's exactly what our topic is today. We're going to be talking about that exact thing and how to go through so that if you're stuck and you don't know how to make those decisions, I want to walk you through it today. Cool. So we do these weekly trainings every week. So if you're here now, it's probably because you've already registered. You only have to register once. Once you're registered once, you'll get the email reminders that it's happening, and then you can come join us and you don't got to really worry about registering. And then what's really beautiful about that is we will then send you a replay via email so that you get the replay. And when we give away free assets, you can get those free assets in the email as well. So without any further ado, I want to just dive in. Okay. So when you guys are analyzing deals and you're making offers on apartment buildings, do you ever second guess whether, it needs to be a joint venture, or if it can be a joint venture, or if it needs to be a syndication? Because a lot of uncertainty is what is the common chokehold on investors that are trying there, and they stay in this pattern of inaction because they don't really know and they doubt themselves. So they get no results. So today I want to walk you through how to determine if your deal can be a joint venture or if it has to be or should be a syndication. Because over the years, we've literally noticed this pattern, and it's this confusing part for most investors. And they're usually asking us stuff like, how many people is too many people for a joint venture? Or can I have any passive investors in my joint ventures? Or what price point should I be considering syndication versus joint venture? Or does it even matter? Or does the size of the property dictate whether it's a joint venture versus syndication? Like, these questions indicate a complete lack of clarity, and that confused mind just stays stuck and doesn't take action. So I'm going to do that. I'm going to try to slow it down a little bit because I know I don't have a slide here for you, but I'm going to tell you, you're going to get the replay so you can go back to this too. But I want to give you a high level framework so that it will make sense of what seems to feel like chaos right now. Okay. So there's 2 questions that will help you quickly identify whether it's a joint venture or a syndication. Write this down. Number 1, whether it's a joint venture or syndication. Number 1, will anyone in the deal be a passive investor? Will anyone in the deal be a passive investor? If the answer to that question is yes, then you must syndicate. Okay. So if anybody in the deal wants to be a passive investor and not have any active role, it must be a syndication. Number 2 question, will everyone in the deal be an active member? If the answer to that, everybody in the deal is an active member, if the answer to that to that question is yes, then it can be a joint venture. Okay. If everybody's in the deal going to be having an active role, it can be a joint venture, but there can't be any passive investors in a joint venture. All right. Second part, when you decide to do a syndication, there's like these 2 other questions that it'll help you determine whether or not it needs to be a 506B or a 506C, which, by the way, the training that I'm going to drop for you in a moment, we'll walk through all this stuff for you. Okay. But these are just high level frameworks to see if this is something that you even want to go and dive into a little bit. Okay. So first one, do you have a sufficient network of friends and family to meet the capital raise that's required to close on the property? Do you have a sufficient network of friends and family that can meet that capital raise need? Because if you're not confident in your capital bench strength, then you're going to have to consider a 506C. A 506B is the friends and family. And if you have a big network of friends and family that are loaded and have a lot of money and it's awesome, cool, that will eventually exhaust and you'll run out. And then you'll have to start raising capital from public and accredited investors. the training will go over that too. All right. So ultimately, if you have a sufficient network for friends and family, go for the 506B if it makes sense. And then 506C, if you need to go out there and go beyond your current bench strength, then 506C is an opportunity for you, but you can't advertise on it. But that's going to probably go into it. Next question. Will you be advertising or leveraging social media to find investors for your deal? So if you're going to be advertising or leveraging social media to find investors for your deal, and you know that your network of friends and family don't have capital to cover the raise, then you're going to need to advertise in order to expand that network. And that's going to be a 506C. That's the only option to advertise. So this framework, it provides that high level logic, but there's a lot of gray area when it comes to learning like how to think it through. And learning how to think like a savvy apartment investor is really just going to serve you long term. So that being said, we do have that more detailed training asset. I told you today was going to be quick, down and dirty because I have a better asset to give you so that you can go dive in when you have more time. It's going to include a decision tree on JV versus syndication. It's completely free. I'm going to drop the link in the chat. And for those of you that are in here, just go grab it right now. Anybody that's watching this on the replay, you're obviously going to get an email that comes to you and it's going to have that link there. So don't worry about that. Okay. And if you're driving right now and you can't grab that link, it will be in your email. So I'm going to drop it in there right now. Let's see, make sure you guys can get that. Boom. All right. That's a fresh training. Stacy literally just recorded that a couple of days ago so that you guys could have a fresh training on that. Brand new, free of service. Hey, next week, it's going to be pretty cool. So for those of you that are already registered, every Friday we do something like this. We just come in, we drop some knowledge. If we have a free asset to give you, we give you the free asset. Next week, we have 2 rock stars that are coming to basically peel back the curtain and show you how they've been implementing what we teach in the academy for the past 3 years. And I'm really excited for them to come in here and share their journey with you, pull back the curtain so that you could see. We're having Teresa Costantino and Denise Curtis come on. That's the monthly, we do a monthly Forged by Fire, which is when we put our students in the hot seat, ask them a bunch of questions about their journey, let you guys ask some questions. So they're going to be talking about their entire journey. They started with duplexes. They're now doing apartments, and they're an amazing team. So make sure that you are registered for Forged by Fire next week, and I will see you there.